Hello traders, welcome to the channel again. André Cardoso here. I hope you had a nice weekend to rest and to prepare the week ahead with your families and with your friends. And for today, as usual, I want to cover a couple of charts with you. Specifically, I want to share with you two charts, one for natural gas and the other one for copper. I think it may be interesting to follow at least the price behavior from the current price zone for those two commodities. And let's start with copper, and let me try to share with you my opinion. And by the way, I will open the comments for this video in order to get your insights and your comments also to this technical approach. And if you agree, if you don't agree, if you have a different perspective, it's always interesting to see other traders and other methodologies pointing to the same direction or eventually in a different direction. It's always important to get notion that we are not owners of the reason. Things may fail and expectations fail every day, so we don't expect the market to respect every time the expectations we create at a specific price zone or a specific moment. So that being said, I will open the comments in the video, and feel free to post your 2 cents for the community. So that being said, let's start with copper. This is a daily time frame, and the reasons why I think this is an important price zone for copper, it's because we are trading multiple elements of or potential support for copper. One of them, the previous fractal resistance. So the previous resistance, it's now potential element. It's now potential support zone. We have also, as you can see, or some of you already identified this as a potential ascending trend line supporting the previous lows. We are also threatening this trend line support, this structure support. And if you pay attention to the Fibonacci retracement levels, you can also see that we are close to the 38% Fibonacci retracement level. We are not there yet, so I admit the price may target this Fibonacci retracement level at some point, but at least for now there are a couple elements of support approaching the recent lows on copper. So that being said, there's also other elements that I think it may be useful to take into consideration. First of all, as you can see, we have the golden Fibonacci retracement right there, acting as element of resistance for this sequence. As you can see, this is a 3 waves sequence to the downside. So this may be what we may call an ABC correction, the 3 wave structure to the downside after a momentum to the upside. And if you take this momentum to the upside, and if you start to track the potential 5 wave structure to the upside, this is an Elliott 5 waves sequence, and I'm assuming, and I take into consideration the most basic approach to identify that 5 wave sequence. So I have the first wave to the upside, we have a correction or a pullback forming the second wave, and then we have the third wave formed in a 2 or a 3, in fact a 3 waves sequence to the upside forming the third wave, and we have an ABC correction forming the fourth wave. So from what I understand from Elliott wave theory, if we project the 5th wave equal to the first one, we will see something like the 78.6% Fibonacci retracement on crude, on copper, so which represents nothing more than a move like 14% or almost 15% above the recent or the current price zone. So if this is the 4th wave, and if we can expect a move forming the fifth wave, and if we assume, or let's say if we project the fifth wave equal to the first one, so we may see copper trading at 462, 463, the 78.6% Fibonacci retracement level. So and that, if the price intends to unfold into a 5-wave sequence, which I think it may be the case. There's a zone that I think, and I think by the books, not by my head, but I think by the books, if the price breaks below the highs of the first wave, the sequence will automatically invalidate. If the price starts to close below these previous structure highs and the highs of the first wave, I think that sequence will automatically invalidate, and we'll need to readjust to the price action and the price behavior and try to understand what the price is trying to do. Note that this third wave, it's also formed with kind of a symmetrical pattern forming the third wave. So we have the first swing high, then the pullback, and if you project the first swing, you can see the price has formed the so-called ABCD pattern inside the third wave right there. Something like this. So that being said, fourth wave, fifth wave, it's coming in my point of view, and if that is the case, if we are now starting to unfold into that fifth wave, I will start to pay attention to this previous fractal resistance, because a violation of this resistance will also confirm one of the processes that I share with you multiple times here in the channel. That will also confirm the potential false breakout of the support. And the false breakout of the support, as usual, should be followed by an extension to the golden Fibonacci level, or even higher, between the golden Fib 161 and the 224% Fibonacci level, completing the shark pattern above the resistance. So we have the first swing low, pullback or a bounce, false breakout of the support. It will be confirmed after the breakout of this previous structure resistance, and if that happens, we may see a move towards the golden Fibonacci extension, or even higher towards the 224% Fibonacci extension levels. As I said, that will complete the bearish shark sequence or bearish shark pattern, one at 168 extension and the other one at 224% Fibonacci level. And the one at 224% Fibonacci extension will put the price, as you can see, very close to the default symmetrical projection for that fifth wave, equal to the first one. So I think we are now facing these multiple elements of support for copper. I will pay particular attention if the price breaks above 4.21. The other chart that I want to share with you is for the natural gas. I shared this chart with you before on socials, on Twitter, and I also posted this chart on TradingView. So it's a public chart that I posted there, and you can track the price behavior pressing these low new bar options right there, and you will see how price develop or unfolds from there. So if you want to join TradingView, you have also my referral link on the description. I believe you get some discount if you subscribe from those links. That being said, let's jump into the natural gas daily time frame chart. I posted these as with multiple patterns completed. In fact, we have a couple of elements there that I want to call your attention to. So first of all, you can see in the blue lines, this blue sequence, this is a symmetrical projection. So this is what we may call an ABCD pattern completed for natural gas. The symmetry completed at 2.49, so the price was pushed to 1.96 later. But that also helped the formation of the major shark pattern that I posted before. This shark pattern, let me change the color to something more. This green shark pattern completed at the golden Fibonacci extension 2.49. So after the formation of that pattern, we do expect a bounce. After the formation of that symmetry or the symmetrical ABCD pattern, we do expect a bounce. And also, if you pay a close attention to this heads and shoulders pattern printed above, you can see the price has formed support just a few points below the default target zone for that pattern, the 200% Fibonacci extension level, just a few points actually above the fractal. We have the new fractal at 1.93 and I put 96, and I projected that 200% Fibonacci extensions 2.04 or something close to that, 05. So as you can see, we have multiple elements which may suggest a bounce for natural gas. I know that there were a lot of people already calling your attention to this or paying attention to this price zone, and for obvious reasons or for different reasons. But in my point of view, it's we have a clear, at least we have multiple patterns suggesting that potential bounce from these price zone for natural gas. So let's pay attention on copper and also the eventual larger or big bounce for natural gas from the current price zone. I'm saying big bounce because that the default target for that pattern that suggests a big move to the upside that represents almost 87% to the 38% Fibonacci retracement level, which is a default, let's say the default expectation after the formation of the symmetrical ABCD pattern. So if you want to trade a Fibonacci level, probably most of you will target the 38% Fibonacci retracement level. So that being said, and by the way, even if you consider the 23% Fibonacci level to start to partitioning or to start to break even your trade, which is a nice option, even though that represents a 43% move on price. So that means that's also significant move to the upside, even if you consider just the very first Fibonacci retracement level. So we have multiple charts that I shared. We have 2 charts that I shared with you today, copper and natural gas. Stay well and see you there in the next video.